Singapore still looks to be in a fairly good position to provide more stimulus. Indeed, it's actually been one of the countries that has really put the foot on the fiscal pedal this year. And we don't think they're really going to take that fiscal stimulus away anytime soon, particularly given the risks that we're seeing. There are other countries, though, that are sort of struggling for fiscal room. In particular, we're seeing that, for example, Malaysia, the fact that they've already had their debt increase significantly this year, whether or not this could actually, if they continue to provide ongoing fiscal support, if that would actually see foreign investors get a little bit worried in terms of credit rating downgrades. So Singapore is definitely one country that we see that has sort of that fiscal space to, out of all of the countries, to provide more room and support.
Thoughts, too, on China, which has been really the outperformer in the region, and we continue to see some encouraging data points coming out of China. But when you're talking about a growth rate this year of around 1.8%, I mean, that is just such a dramatic change from what we've seen in prior years, and that has implications for the entire region, of course. So as we look ahead, how strong do you think the rebound could be in 2021?
We're looking for something closer to 7.6% next year. So you're right, we are seeing encouraging signs. We've seen exports continue to improve and actually outperform in numerous countries in the region, partly because they're ahead in terms of containing the virus. They had the big drop in Q1. But also there'll be ongoing fiscal support, probably a little bit less on the monetary policy side. But they definitely want to see, domestic demand continuing to improve, and that lag that we've seen in consumption should actually continue to recover, providing greater support both for actually import demand in the region more generally next year.
And as always, though, Sian, I mean, there is a balancing act that has to be conducted in China and other economies in between reflating the economy, providing more support, and making sure the debt risks don't get out of control. Do you think they have a good handle on this?
Yeah, at the moment, I mean, that's partly why we're actually thinking that we're not going to see much more on the monetary policy side in terms of credit growth. There are definitely signs that the recovery domestic demand is picking up, so they're probably not going to. They're going to become more consequent of the risks of leverage going forward. And so it's again just going to be making sure there's liquidity in the market and that the recovery is ongoing. Of course, there's a wide range of risks. We still haven't got a vaccine as yet, and I mean even with a vaccine it being distributed. So the external backdrop remains quite challenging.